Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, July the 23rd, the year 2019. Let's talk trading. The Promise. Once again, I awakened to an email inbox filled with different ads promising me things like 100% returns and solutions. And if I just buy their product or take their seminar, their course, their book, that all my trading problems are going to go away and I'm going to be a successful trader. You see, what they understand about the human psychology is you don't buy the item, you buy the promise that you attach to the item. That's why they have hot looking models in car ads, because you're not buying the car. You're buying the hope that if you buy the car, you'll have a hot looking model. I mean, it's just that simple. And when you learn these things, then you can see through all the hyperbole, all the BS, all the mind tricks they're playing on you. You don't buy the indicator, you buy the promise that, hey, this is going to be the shortcut to riches. Now I don't have to really learn anything about trading. I can just plop this indicator on the screen, or even better yet, an EA, a robot. It'll do all the trading for me, make me lots of money. I just have to laugh. I mean, how can you keep a straight face? But they do. They keep a straight face, and guess what? They do it. Why? Because it works. Because most people don't understand the psychology. There's these guys out there selling you, books and courses on how to sell. I mean, think about it. They're selling instruction on how to sell. I just find it amazing that the stuff still works. If anything, it just works better than ever, because these guys have really tweaked, selling, you know, to the science level. It's almost, it's an art, but they really have the science part of it down. And because they have it down so good, that's why you have to really control your own personal risk management system. So, you put a value on something that you're not going to spend more than a certain thing for any indicator or any system or anything. Now, of course, people say, but you get what you pay for. Yeah, you get that promise of hope. Yeah, the more you pay, I guess the more hope you might get. But you guys know from experience, most of that stuff just doesn't work. And then there's always somebody that'll come along and, they'll have some new fancy name or something, and they'll put a spin on it, and then they'll catch your attention. And maybe they don't get you to bite, but hey, there are probably 99 other guys biting, chomping at the bit to get onto it. I just find it just amazing. But you could just take something as simple as your risk management. If you just master that risk management, probably sooner or later you're going to just stumble upon something that really works and works well for you. I mean, it's not one size fits all. I mean, I have what, 4 or 5 different methods that I have come up with, and using the statistics and everything. But some of those methods might not work for you. Maybe none of them work for you. I don't know, but I know one thing, they are working for some people. Here we go. Look at this. The euro yen broke out of last week's lower wick zone right now. So now we're down about 12 pips here from the open, 13 pips. And for those of you just tuning in, all the gaps have filled. And you see, it came up and it hit that weekly pivot. The high, 121.159. The weekly pivot, 121.159. I mean, it hit it right to the point. Now, some of you who don't do the pivot trades, you missed out. And those who did, if you took profit right there, you nailed it. And usually what I do is if I were doing this trade, if I would just tell you how I would plot it out, I'd probably put the profit about at 121.13. Why would I put my take profit there? Why wouldn't I give up those 2 pips? Well, it's because sometimes it gets close, and so I think of it more as a hand grenade. I think of it more as a zone. So, within a couple of pips, because the spread here is 1.3, so you just don't want the ask to get there. You want the bid to get there, but if the bid doesn't quite get there, you need to be within the spread or just outside the spread. So, 1.3, 1.4. So I just rounded up to 2, and that's why I take profit at 0.13 or maybe 0.14, since if I round it, this would have been 16. So that's just one way I would trade that. And here, previous day's midpoint, as you can see, hit the midpoint, went through it, but then crossed back below it. Now, something to look at. You see, we've gone out of those wick zones, so we need to scrunch. Look where we are. We are making new yearly lows. We are 475 pips below the yearly open. That is huge. Huge. And here's the yearly low right here. Actually, we're not, because of that spike, but if you get rid of that spike, you can see we're making a new low. This, I don't remember if that was a fat finger move or not, but I think that happened on a couple of pairs. Okay, this is Tuesday. Here's that opening day range right here. As you can see, we're now 14 pips below it. Once again, this stuff isn't hard. It really isn't. You just trade what you see, put your risk management in place, and when the market smiles upon you, you can take profit. But just remember, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And Forex trading, as all trading, is very, very, very risky. So you might want to seek guidance from an accredited financial professional advisor, as opposed to somebody making YouTube videos, putting them out there every day, and just showing you how simple and how easy trading is. Because I said trading is easy, but trading profitably, that's slightly different. But as you can see here, you can find some simple method and you use it and you can profit from it. And we've got the 3-ball here. So we'll let this daily candle close and see what happens. Once again, we're in the opening range, or we're below the June open, which was the lowest open. And you see here, we're out of the range of June. We're way out of the range of July. And on the daily, you see here, the inside bar, nowhere near it. Almost got there, but nowhere near it. And you can see the euro is giving an inside bar opportunity on the daily and the weekly here, but the range only 45. Once again, only 2 pairs over 100. Where is the volatility? Showing you it broke out of that low. And here on the hourly, price is just dumping at the moment. So we'll be putting in probably a new yearly whole low, new monthly Let's see, that's the monthly D1 lowest open. It's here a couple days ago. So we'll see how many new lower opens. But for those of you trading 1, 2, 3, 4, 5, 6, 7 red candles in a row, time to look for a buzzard reversal. And you can see right here, out of the short zone and down. The pivot was within the buy zone, so no real bias. Just take the signals as they appear. There's one, there's one, there's one. There was one here. This one resulted in a loss, but look, boys and girls, got a higher high, then lower high, lower high, lower high. You see that trade. If you would have jumped in and it started reversing when that candle turned red, just scratch the trade. You might have a 2-pip loss. No need to take more of a loss when you can see what's going on here. Just reading the chart. I mean, to me, it's so funny. People buy all these different indicators, these squiggly lines, these, separate window indicators, and they just can't see which way price is moving. And I think the reason is because they're not confident, because they don't put their stops in place, so they're worried about, if price goes against them. Once you put your stop loss in place, you no longer have to worry if price goes against you. You know the worst thing that can happen. So they might hesitate, So somewhere along, maybe right now they're going, oh, price is going down, so they're short here. Well, look at how they waited all this time. And then if it turns around, then they're going to be mad. Oh, I can't get it right. Okay, rat zone opportunity coming up here, traders. Rat zone, green rats might be able to munch some cheese coming up here. Just wait for a rat reversal set up. Let price do its thing. Let the candle close. See how low it goes. Then get in on that reversal. Where are we on the pivot? There's weekly S1 down here. Daily S2 is right here. So you could always look for some reversals in those areas. And we hit the pivot on the daily. So you can see we still have that one missed pivot, but we're 200 pips plus away. Maybe not this month. Price action, there's a 3 ball at the bottom. Once again, remember, opens in it between 2 lines, usually doesn't stay within those 2 lines. There's money to be made out there, traders. You just have to go and get it, right? And the wick zone, there wasn't much of a lower wick zone yesterday. And one just sailed right through it. Here we go. Once again, candle color at the line. It's so easy to see when you don't have a bunch of gobbledygook all over your charts. I have the mid dot, previous mid dot on the chart, some horizontal lines. It's all I need. I can see which way price is moving. On the tick chart, you see we've got some downward motion here. So you could wait. If you're a rat, wait for the bid to get above the valley of the ask, and then at times your trade, and if all things go your way, you can reap the profit. Here, you see, we had a couple of long triggers, and we had a nice short paying off handsomely. So that's it, fellow traders. Just don't be fooled. And remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks.